Hey everyone, welcome back to Corporate Decoder. Today we're diving into Tigo Energy's latest quarterly report, or as I like to call it, the Solar Coaster, because boy, what a ride. But before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join us after the show. Tigo Energy, a company focused on solar and energy storage solutions, just released their Form 10Q for the quarter that ended in March. As with all these reports, there's a whole section dedicated to forward-looking statements, basically what the company thinks might happen. It's important to keep in mind this is not a promise. Let's dive right into the financial details. First, the balance sheet. We are looking at what the company owns and what the company owes. Tigo started the year with around $11.7 million cash in the bank, which went down to about $8.5 million. That's a drop, but not a critical one, which means that they spent $3.2 million of cash over just 3 months. Accounts receivable is about $10.3 million. This is the money that is owed to Tigo by its clients. That's a sign that people are buying their stuff and they will hopefully get paid at some point. Now for the other side, under liabilities, accounts payable are about $7.9 million, what they owe to others. It did not change compared to the end of last year, so at least it's stable. Here's a big one to watch. There's something called short-term debt worth $42.7 million. This is debt they have to pay back within 1 year. That's a significant amount, considering they have only about $8.5 million in cash right now. We'll see if they can cover this. Finally, under shareholder equity, accumulated deficit reached $145.5 million. What does that mean? That the company lost $145.5 million since it started doing business. As you can imagine with those values, it's not a surprise that there is also substantial doubt about the company's future. Moving on to the income statement, let's check out the net revenue. They made about $18.8 million in revenue this quarter, a significant increase from the $9.8 million they made last year. Sounds great. So what happened to the cash? But here's the catch, their cost of revenue. That is the amount of money spent to actually generate revenue also jumped. We're talking about $11.6 million, up from $7 million. This is why even with an increase in revenues, the cash did not follow. Then we have research and development, sales and marketing, and admin expenses, which account for $11.1 million overall. Add the interest expense of $2.8 million and you can see why the loss from operations, also known as operation income, is a negative $3.9 million. All that adds up to a net loss of about $7 million, a bit of an improvement from last year's massive loss, but still a loss. This basically means that they spend more money than what they earned. And the last important metric of the income statement, loss per share, is around 11 cents. Let's check where this company makes and spends cash in real terms, the statements of cash flows. Cash flows from operating activities show that Tigo spent almost $500,000. This is a result of a $7 million net loss. When it comes to investing activities, the company is purchasing short-term investments. For financing activities, they did earn some cash with stock options, which brought in about $800K. At the end of the day, the cash is lower than the start of the period. To see how the shareholders' equity changed, let's scroll to the statement of shareholder equity. In this quarter, there was some dilution, meaning new shares were issued. Net loss then reduced the total equity. The combination of that resulted in about a $5 million loss in shareholder equity. Now for the debt, which is basically what they owe, about $50 million worth of debt need to be paid at the end of the year, and they cannot pay. That is why in the future, the company will attempt to refinance its debt, which could change the game entirely. Finally, to talk about the company's assets, the only thing to mention is that over $12 million is in the form of goodwill, meaning that part of their value is completely made up of hot air. We are done with the numbers, and so did the company when they evaluated subsequent events after the quarter. Now, looking at these results more broadly, Tigo is facing a tough situation. On one hand, their revenue is growing nicely, almost doubling compared to last year. However, they are losing money, and what's even worse, they are running out of cash. The main risk is debt, as they are unable to repay their current loans, which is a problem. The main opportunity is their stock sales at the market. They have to somehow manage to become profitable in a tough market, which seems like a difficult task. Alright, that's our breakdown of Tigo's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.